Yo, yo.
Guys.
Hello, hello.
Hey, sup?
Hey, Joe. Hey, Elliot. Hey, Soup.
Hey.
Wow, I guess no one wants to discuss SIP-1 yet. Looks like people are gonna be listening to the recording.
That's right. That's why we do the recording. That's why we have the transcript.
Beautiful.
Sounds good.
Are we waiting on any other team members by chance?
No, Nico is actually mobile right now. He's on a train traveling, so he's not going to be able to join.
Gotcha. Okay, very good. Well, we'll get started. We appreciate you guys being here. Like Alec mentioned, we'll have a recording of this. We'll have a transcript also that can be translated in different languages. We know everybody cannot join us live all the time, so they'll still have access to it. Welcome everybody to our weekly AMA. Today we will be fielding questions and discussing a huge launch this week in the Sperax off-chain DAO. We have our first proposal right now that's live, and we would like to spend some time today discussing the ins and outs of that. This is our first opportunity for the Sperax team to serve as analysts for the community, helping to explain the benefits and trade-offs of potential SIP proposals. So we will get to that after introducing the protocol and team. I'd like to thank Alec and Joe and Sue for being here today. My name is Elliot. I'll be moderating the AMA today. We do these AMAs every week. This is our best opportunity to directly inform the community on different topics and themes that we are working on. And this is your time to ask us questions related to Sperax USD and or the topic of the AMA for the week. So to start, I'll give a little background on the Sperax Foundation. The Sperax Foundation is a software development team building open source financial software, which is deployed to public blockchains. We are currently on the Arbitrum network, and Arbitrum is an optimistic rollup of Ethereum. The Sperax Foundation works to be both an analyst for the community in decisions being made via the DAO, and is the implementation arm of Sperax improvement proposals, or SIPs, that pass via the final step of the DAO decision tree, which is a community vote. Implementing SIPs via the DAO requires the Sperax Foundation to manage the lever systems of the protocol, which you can think of as a giant machine. The two tokens that power the Sperax machine are USDS and the SPA governance token. So let's talk about those two components of the machine. USDS is the beachhead product of Sperax, and it is a stablecoin yield automator. It's effectively an on-chain stablecoin fund which accepts various stablecoins and sends them to yield strategies. And all of this is visible on-chain. What's cool is your receipt token for the fund is also a stablecoin, USDS. USDS is pegged to $1 and backed by stablecoins earning yield in the fund. Yield is distributed to holders of USDS without paying any gas. This allows new users to DeFi and crypto OGs to harness stablecoin yield in a user-friendly way. The SPA token is the other major component of the Sperax machine. I think a great way to look at the SPA token is as a revenue sharing partner with USDS. As a SPA staker, you are rewarded with SPA tokens purchased on the open market with funds generated from three different sources. First, we have the minting and redeeming fees from USDS. Second is 50% of the yield generated from collateral and DeFi. And last but not least is the incentive sponsored by the Treasury. In addition to being a revenue sharing partner with USDS, SPA has another super important function, and that is through governance, which we'll be talking a lot about today. Through the vSPA staking protocol, SPA stakers become active participants in the Sperax DAO. These SPA stakers are expected to be the managers of the on-chain fund via the DAO. So the dual token system aligns incentives. The SPA holders via the DAO decision split the upside of the protocol, but are also liable on the downside. A few protocol stats to pass along this week. The USDS TVL is sitting around $7.3 million right now. SPA price is in a similar range to last week, and staking has continued to increase. We saw another 8% increase in SPA staking week over week, with an aggregate increase of about 55% over the last month. SPA buybacks continue to rise as well, with right around 5.5 million SPA being bought back in total and distributed to the stakers. Currently, around 65 million SPA is now staked for an average duration of 3 years. So with that little intro, I would like to pass it to Alec to start our discussion. And actually, Alec, let me give you permission to speak. I'm sorry, you must have cut out and then got back in.
Hey, thanks for that, Elliot. My apologies. I had managed to disconnect myself, so thanks for getting me back in here. Yeah, so the purpose of this Twitter space today is to kind of like dissect what this SIP-1 is, so the Sperax improvement proposal number 1, and then, you know, address any questions that might be had around that proposal, maybe motivation or, you know, some of the technicals. And then we can ensure that everyone clearly understands what the proposal is before it goes to voting this evening. So let me just kind of give you like a too long didn't read summary of the proposal and how we see, you know, the benefits, and like we'll allow for Sue and Joe to shed some light around any like technical additions or, you know, just any other parts that I may have missed here. So first off, this proposal, it's focused on collateral diversification. At the very highest level, we're interested in getting out of USDT and into a more diversified basket of stablecoins. So in addition to just, you know, diversifying our collateral pool, we wanted to use this first SIP as kind of an example, you know, just to kind of show the community how you go about the governance process, and then how you can actually play the role of this stablecoin fund manager. So it's up to you guys to continue to research, just like we did in this proposal, and propose new asset types and new deployment strategies. And the cool part is, you know, the SPA stakers get to control this massive stablecoin pool. You know, today it's valued at $8 million, and you have a couple jobs. You got to fund the 11% auto yield, but if you go above and beyond that, you know, you get a 50% revenue split. So it's very exciting because all of the incentives are aligned, and this is the first example of, you know, how you can kind of play out this role of being a fund manager. So now let's get to the actual proposal. So the motivation is, you know, everyone is familiar with the Tether FUD, and recently they just published some audit reports showing that they actually are only partially collateralized. So some of their cash equivalent products lost some value, and they're not one-to-one backed. So in light of this, you know, we just want to diversify into some more transparent on-chain stablecoin products. And very practically, we're proposing that we get out of USDT and we onboard Frax and VST. So let me introduce those two assets real fast. So Frax, it's a extremely battle-tested hybrid stablecoin product. It's 90% collateralized by USDC. It's got a circulating supply of over 1.5 billion, and there's plenty of liquidity on Arbitrum. And they actually managed the crypto crash this year exceptionally, no peg deviations, and go check out Frax. Killer product and super, super supportive team. And the other asset is VST. VST is an over-collateralized stablecoin, so it's like, you know, DAI. And it uses a collateralized debt position model, so the peg is maintained incredibly tight at $1. And the team, just like Frax, is extremely supportive and willing to really collaborate with the Sperax community. So those are the two assets, and SIP-1 is asking permission from the community to accelerate the process of this diversification, specifically by swapping the USDT for Frax and VST. So we asked for a couple of days to allow for the core team to execute this $3.5 million swap. We need a couple of days because, liquidity is pretty good on Arbitrum, but $3.5 million is still a large sum of money. So we need to actually do it in smaller incremental swaps over a couple of days. So you can read that in the SIP section as well. We're asking for up to 7, but if liquidity permits, hell, we'll do it in a day. And another cool part, Joe's going to get into this a little bit more, but the engineering team came up with this brilliant function that can allow for these swaps to be done while only granting permission for the team to swap USDT. Naturally, as a community member, I might be a little bit concerned about the Sperax core team being able to move collateral, without permission of the community. But I just want to make it explicitly clear that that's not possible. And once this SIP is passed, if it's passed, all we'll be getting access to is the USDT. So once the USDT is out of the Vault core, the Sperax team is back to where we are now, where we have no ability to move the capital out of the Vault core. So that's the actual proposal. The benefits are quite straightforward. So we get out of USDT. We no longer have to deal with that depegging risk. We get the diversification benefits of onboarding 2 new types of collateral types. We also get new yield opportunities. So I haven't addressed this at all yet, but the USDT is only earning 2% right now in the 2 pool. But once we onboard Frax and VST, we can actually get 9% investor rewards and an additional 18% in FXS rewards. So we can get nearly 30% return on this new position. So we view it as significantly safer from a depegging standpoint. Plus, we get a better APR to fund auto yield and to fund the SPA buybacks. So, thanks to that, right now, the APR is already like over 1,000%, all organic. So your SPA position will 10x in a year if you do a max lock and you play the role of this fund manager. But if we can onboard these new collateral types and we can increase our returns, all that does is increase SPA buybacks, and all it does is add to the reserve budget to continue funding auto yield into the future, or even increasing auto yield if we so wish. So that is the SIP-1. From a timing perspective, just so you all are familiar with how the off-chain governance process goes, this proposal was posted on Monday of this week. So our governance proposal process has a 48-hour deliberation period. So that started Monday at 3:30 p.m. Eastern. It's going to end today at 3:30 p.m. Eastern. And there's been 26 positive votes on the poll so far, with one negative vote. So it does look like it will be moving forward to a snapshot vote, which will begin this evening and then end Saturday after 72 hours. So if you have any comments, thoughts, concerns, this is the venue to bring them up. We can chat about them, and we can update this proposal if it makes sense, and before it goes to voting this evening. So I hope that all was clear. SIP-1, we want to diversify from USDT, get into a diversified basket of stables that generate more yield for buybacks and to fund auto yield. So that's a summary of it, and I'll pass it off to Joe and to Sub. Maybe there's some additional components that you want to address.
Maybe I can start first. Just one thing I want to emphasize is the team has no right to touch the collateral. The collateral is safe in the smart contract. So we do not have any privilege over any other user to touch the fund. It's just there. No function to touch there. This is something I want to emphasize first. Second is according to the community's demand, we have Alec, you have the question?
I think he might just be cheering on your comments. Yeah, as am I.
Nice. Yes. So according to the demand from the community, so we will swap if the SIP-1 passed. Then we will go ahead, follow the community's wish and to swap USDT to Frax. So to do that, we need to upgrade the USDS protocol so that we can do the swap. Even if we have this upgrade, we still have no rights to touch anything other than those specific amount of USDT. So the function can only swap USDT with a specific determined path to Frax, nothing else. And also, even to make sure this function will not be exploited later on by any other, say, user or anyone that is malicious to the protocol, we will permanently disable this function after the swap is done. So everything will be transparent. We will also, if you guys want to see the code, what function is added, we are happy to share. So we only do this upgrade according to the community's demo. So we still will, I just want to emphasize we will not touch and cannot touch any collateral in the protocol. So you guys can be sure.
Awesome. Thank you, Joe. Sub, anything to add?
No, I think we are pretty much covered. Yeah. So I believe Joe and Alec have covered all touch points. And yeah, looking forward to getting the proposal approved and implementing it.
Yeah, very good. So let's start some of the discussion around this. So if you're listening to this and you're wondering, well, how do I get in on this action? Head over to our Sperax DAO forum at forum.sperax.io. You'll see where you'll be greeted with a message that kind of gives you an overview of the rules and shows you the process that these SIPs go through, and also you'll have a link to the template that we use to make proposals. And so head on over to that forum.sperax.io and you can get in on the action too. And if you're someone who just has some ideas and wants to kind of ideate and think with the community, head over to our Discord channel. We have a DAO discussion channel there where if you think you might be onto something or have an idea and you want to bounce it off some people, head over to the Discord. We love to interact with you there, and other community members will also be able to jump in. So I want to pull our first question, actually comes straight from the Sperax DAO forum. And this is why we like to generate such good quality discussion around these SIPs, because then we need to discuss them and deliberate them and make some decisions. So the first question says, big supporter of this. It's a huge and smart move. My only question would be, what are we going to do with the FXS Vesta rewards?
Yeah, Alec, go ahead.
Hey, yeah, I was just going to say, right now, all of the strategies are very basic farm strategies, which sell the governance token rewards. So it was being done out of necessity up until this point, simply because the yield generated on the pool was quite low. But as this user, I think it was Sam Martin, he brought up, he's like, yo, this, the APR is significantly higher on this new pool, so we could get a little strategic with some of the rewards. So we love the idea of doing things like collecting FXS to have more power in the curve or the Frax gauge, kind of like the curve wars, but for the Frax gauge. We're open to that, but, for this SIP, we're going to elect to go really simple. But Sam, I really encourage you to, do an SIP and write a proposal around storing some FXS. I think the idea of selling the Vesta to fund auto yield and then retaining FXS for governing power is really, really exciting. But for SIP-1, it will be just a farm and sell strategy.
Yeah, I think that pretty much sums it up. And we'll also be doing a lot of other proposals in the coming weeks. One thing to point out is, guys, we don't call it a SIP unless it's approved and pushed to development. So it becomes an SIP after it's gone through its over all the stages of being a proposal. So yeah, I mean the committee can sort of go ahead and create a proposal, and if it gets approved, then we'll start calling it an SIP or Sperax improvement proposal. Just a bit of technicality, but I think it's sort of important from a branding standpoint.
Yeah, great addition. Thanks.
All right, so I just brought CryptoBis up on stage. CryptoBis, if you have a question, you can go ahead and unmute yourself and ask away.
Yeah, good afternoon. How are you?
Very well, thanks.
Yeah, I'm fine, thank you. So I got a question. My question is concerning how the cryptos are doing in this moment, because though last week we see a lot of bullish period in crypto in the market, but right now at the moment, maybe since yesterday now, we've been seeing a lot of bearish period, which many tokens are falling down back. So my question is that how are you implement to stabilize your token so that it won't be following Bitcoin trend, because many tokens, as we've been into industries, many tokens just follow the trend of Bitcoin. So how are you going to stabilize token so that it won't be following Bitcoin trend? So thank you.
I can take the first stab at that. So I think we're going to be observing a separation of asset flavors in this bear market. I think that those that have true on-chain cash flows will prevail over primarily speculative assets or bearer assets, such as a product like Bitcoin or something that's attempting to be, a money-like. So SPA is not supposed to be money-like at all. It looks more like what Elliot mentioned earlier, more like a revenue share token. So even if Bitcoin is going down because speculation is drying up, you can look at an asset like SPA and do more traditional valuation modeling. You can look to see, what type of revenue um, is each share earning, and then you can do things like, price to sales, price to earnings ratios, or something like a discounted cash flow valuation. So my opinion is that those tokens that act more as capital assets will decouple from Bitcoin and almost act as like a buoy, even when the general tide is going down. So that's a personal take, but I really think that we're going to see like a 2020 style environment where people really, really value on-chain cash flows. And, Sperax USD being a on-chain basket of stable coins earning cash flow will appeal quite nicely to that narrative.
That's awesome.
All right. So thank you for the answer. Thank you.
I have a question: how to implement the blockchain economy efficiently, and also what strategy are carried out to avoid such a USDC, which is a stablecoin. Thank you.
Well, I can touch that. I missed the second part about USDC, so I'm going to have to ask again on that. But when it comes to just like the basic tokenomics, as Elliot mentioned, it's a two-token system. But what's beautiful is the incentives are very aligned from a tokenomics standpoint. So the SPA, which is the revenue sharing token, as well as the governance token, allows for holders and stakers of the governance token to dictate the actions of the on-chain stablecoin fund. If they do their job well and generate lucrative yield without taking on any losses, they'll get a revenue split. But say hypothetically, this governance token holder and the Sperax community takes on too much risk. This means they would deploy some of the collateral to a risky protocol or risky bridge or any risky strategy, and it gets rug pulled, or we lose some of the collateral value. At that point, the protocol will become under collateralized, but the protocol has a safety mechanism built in. So it will mint SPA to make the protocol whole once again, which makes these fund managers liable for the downside. So yes, they get a revenue share on the upside, but if they take on too much risk, they'll be the one covering the bill if there's a rug pull. So it creates a very harmonious relationship between the two parties where the stablecoin holder gets stability and reliable yield, and the governance token holder gets to seek out new yield, get a revenue share, but they're on the hook for the risk management as well.
Thank you, sir.
Yes, very good. Thank you for the question and great response, Alex. So I want to kind of dovetail this, so I'm going to pull a question off Discord. The question comes from Super2, and he is asking, so this was actually asked before we launched the DAO, so it has a little bit of a different light on it now, but Super2 is asking about our strategies allocated in accordance with risk assessment. And I think as we've kind of pointed out here, and as Alec has mentioned, the Sperax DAO gets to now choose that flavor. So, anybody is welcome to start a discussion about any one strategy. And then these strategies will have an inherent risk involved with them, from super safe to maybe a little bit more risky. And so that's where the Sperax Foundation comes in and helps to educate the community and help educate them on the benefits and the trade-offs, and in this case, the risk assessment. The second piece to the question, and Joe, this is a good one for you. He's asking, are there any provisions or insurance policies against collateral that is lost due to exploits on any protocol where it is allocated? If not, has the team considered and or accounted for this possibility occurring at any time? How would it be handled?
Yeah, that's a good question. So yeah, we are extremely cautious on change or upgrade or when we are drafting the code at the first place. So we will first do internal testing, which consists of 3 steps. First, we will have one person write a smart contract, another person to write test cases, so that there's no bias from the writer. Second, then we will go over at least 3 or 4 times code review by the whole smart contract team, which consists of 5 smart contract developers. We will write, every one of the 5 people will read the code line by line. Lastly, we will do integration test, which means we will launch our mainnet fork, which is the exact replica of the Arbitrum mainnet. We will test everything as if it's in the real real environment. So basically simulate every possible action in the mainnet fork. So these 3 steps is the team testing, internal testing. Then we will go also to outsider auditor like CertiK, like Slowmist. They will also check the code. So there's also a third-party check, and they are professional team to check the quality and any possible vulnerability of the codes. So I guess we follow this protocol really strictly. We want to prevent any possible exploit on our protocol. So I'm very confident about our codes, but I mean, it's always good to have extra caution on whether it is possible to be a vulnerability or what happened, any contingency plan. So we also have a contingency plan which covers every extreme case when a hack do happen. We have a contingency plan to say first step shutdown, which part of the protocol, etc., etc. And yeah, if you guys want, we can also publish that if this can make you guys feel more comfortable. So we do have contingency plan. Regarding to the insurance, I guess it's not a standard, or it's just not mature in the industry, unfortunately. There's not reliable insurance company to cover crypto in specific, or like a decentralized protocol that acts as a reliable insurance protocol. We have to make sure it is reliable before we have that, because say if we want to have a decentralized insurance protocol, then you have to integrate those protocol into our protocol. So if their protocol, their team, their codes are not reliable or robust enough, that might be actually open a new surface of attack, right? That's not what we want. So we are definitely constantly looking forward to like better contingency plan, including a possible like insurance, right, in the future. So I think it's really a good point. It's also a good thing for the whole industry to think about, like how to make sure the protocol and safety and also the capital in the smart contract. But I'll say I'm pretty confident about the safety of either the collateral and also the codes of our protocol. So no need to worry too much.
Awesome. Thank you, Joe. The next question comes from Talha, and he is asking, what criteria or requirements will we need to submit a proposal on the DAO forum? Sub, do you want to take a stab at that one?
Yeah, happy to. So in terms of, what the community can or cannot propose is not 100% restricted. We have kept it quite open-ended as of now. So anyone is sort of welcome, and please feel free to participate and just write up a proposal. And what we do after that is sort of, what puts the checks and balances. So some of our moderators internally, community members, also who have been advanced to the moderator stage, internal team members, core team members, etc., will have access to propose changes to your proposal, and you have to sort of incorporate that proposal, and so that's the route we are taking. So please feel free to propose anything you want. For it to go into snapshot poll, the proposal should meet a certain requirement. Now, that is something which is also going to be decided on a case-by-case basis, but a fair, structured evaluation of that proposal will be shared by pretty much all team members. Also, I forgot, sorry. So while you are, while you try to create a proposal on forum, you would also see a template which actually Elliot and other team members have contributed towards, and you can sort of use that template to create your proposal, and that should be sufficient for us in the beginning. And as I said before, like, you have to sort of work towards what the community is looking for. So look for feedback from the community, internal team members, core team members, etc. And once you incorporate those changes, it will go through a process of moderation. Now that's something which we will be taking care of. And so that begs the question as to who can be a moderator. So as of now, it's only a couple of community members, and mostly it is internal team members. But eventually, we sort of hope to broaden the scope of who can be a moderator as well. So yeah, I mean, I hope that answers your question. So to keep it short, I mean, anyone can propose anything, and there is a process to take that proposal from your raw stage to a final stage, which will be completely, managed by the community as well.
Yeah, perfect. Thank you, Sub. And, as far as like the very first step to, quote unquote, onboarding the community, like I mentioned before, head over to forum.sperax.io, create a username and a login. That's your first step. Then you'll be able to kind of peruse the forum and get a feel for the proposal that's posted and read some of the comments, and you can think yourself and weigh in, because we do need interaction. We do need all of the community coming together to help make these decisions. So thank you for that, Sub. The next question comes from Super A, and this question was again asked before we launched the DAO, so it has a little bit different flavor now. But maybe Super A is asking, what do you mean by the Stargate yield strategy mentioned in the last AMA? Could someone just kind of give a 10,000-foot view of the Stargate yield strategy?
Yeah, I could take a hack at that. Stargate is a interchain communication protocol, so it's a bridge, and it accepts stablecoin liquidity, and it generates it will pay users to basically park stablecoins in the bridge to allow for users to go cross-chain using that liquidity. And if you park your USDC in the bridge, they'll pay you over 7% APR in their governance token. So we are integrating that into the protocol. And then once it's integrated, we will ask the community permission to deploy some USDC there via a governance proposal.
Very good. Thank you, Alec. Just a couple questions left here. So the next question is about SPA stakers and what they should be thinking about when considering new asset types or deployment strategies. So could someone kind of give me a rundown of what SPA stakers should be thinking about when considering the assets, new assets, and strategies?
Sure, sounds good. So there is a risk benefit analysis that SPA stakers should be doing. So first of all, SPA stakers get 50% of the income that the yield is generating. So 50% of the yield is used to purchase SPA tokens from the open markets and is distributed to SPA stakers. Rest of the 50% is basically that is going to USDS holders. Now this is the benefit that SPA stakers get. Now, what is the risk involved is primarily around how or what happens in case, let's say, the strategy that SPA stakers had voted for fails. So in that case, when users try to redeem USDS for underlying collateral, new SPA tokens will be minted, which would in return reduce the value of SPA tokens. And that means that SPA stakers who are already locked their capital in the vote escrow SPA token protocol, they will be unable to liquidate their assets and they will be losing value. So the benefit is that you get upside from the yield that the collateral type will generate, and you also have to make sure that the yield is generated in a safe manner. Otherwise, it could devalue your SPA holdings. So yeah, take a cautionary risk-benefit approach towards which collateral should be, whitelisted.
Could I add one thing there? I just want to add the final consideration, which is liquidity. So the asset that you're requesting to be added to the collateral pool must first be liquid itself on Arbitrum, because a user needs to be able to burn their USDS and get that asset and then sell it for peg stability's sake. So the core asset itself has to be liquid, but then also the token in which we are earning rewards must be liquid. So say we have, VST coming into the collateral pool, VST is getting lent out, or it's, providing liquidity on an AMM, and then it earns reward tokens. Those reward tokens must also be liquid. If they're illiquid, then our APR will radically decrease. So liquidity is extremely important for both the collateral asset and the reward token.
Yeah, totally agreed. I think that's a very, very good point, and definitely something SPA stakers should keep in mind while making these choices. Another thing, I guess, is also understanding the nature of the stablecoin. So we would like to, work with stablecoins or assets which are quite, de-risked in by themselves, have proven their, peg over a period of time, and are not susceptible to any kind of smart contract risk, at least as much as other stable coins, not susceptible to let's say centralized forces. So yeah, I mean that's also some of the important characteristics that we're looking for in the underlying collateral that we whitelist.
Wonderful, thank you. And so the last question that we have, and this is good on timing. So we have just launched the off-chain portion of the DAO. So what are the next steps for the DAO itself? How do we get to the final stage of the DAO? Sub, do you want to talk a little bit about that?
Sure. So first thing is, I wouldn't want to say that I know the answer to that. Like that would be a lie. I think so. It's a gradual process, and the community is sort of just in the initial stages of forming. And right now, we want to have as many discussions as possible, as many offline, online discussions as possible. I want to see more engagement, and that's sort of going to drive the direction we take. I do have my opinions, I do have my visions, but I don't want to impose that on the community or onto anyone else. I think it should be a collective process. So to share about my vision on how I foresee this playing out is we build out a set of product and features. So we have to move fast before on-chain DAO is implemented. Obviously, because once on-chain DAO is implemented, it's going to take a lot more time to implement anything. But by the time we are in a stage where we can implement on-chain DAO, we should completely decentralize. There should not be any dependency on the core team to take any action. The protocol should be managing itself on its own with respect to its costs and benefits and everything, and it should be able to, create a ecosystem of, not just physical community members, but it should sort of create a ecosystem of protocols that are its partners to make sure that the product is fluid always. So to speak, like we should have a lot more collaboration from other protocols. We should have a lot more partners in the form of street beat to create demand for USDs, that kind of stuff. And all of this should be propelled through the off-chain discussions that we are going to do on our snapshot and forum. So that's going to be important. And by the time, let's say, I'm thinking by the end of this year, when we have accomplished sufficient decentralization, I think Joe is the one who has been always pointing out that decentralization is only a spectrum. And so, yeah, I would sort of reiterate on that as well, that it's a set spectrum. So I don't think we can be 100% decentralized before on-chain governance, but we hope to be as much decentralized as possible by the end of the year. And by the time, we hope to have achieved a decent product market fit across a few chains and ecosystems, along with a few organic demand creation initiatives for USDS and SPA tokens. And once we have achieved that, then it would be good to pass on the baton to the on-chain DAO and make this a living and breathing organism that is propelling itself towards glory on-chain.
Love that. Thanks, Sub. So I think that's all the questions we have for today. I would again like to thank everyone for joining us. This is a super exciting week for us. The DAO launch is a really cool progression of the protocol. So we're really looking forward to working closely with the community on this. Like I mentioned before, this has been recorded, so we will post this on the Sperax Discord. We'll also have the AMA transcribed, so that will also be posted later. Thanks again to the team for their time today, and we will be back better than ever next week for another AMA. Thank you, guys.
Thank you, guys.
Thanks, guys. Have a good day. Bye-bye.
Thanks, everyone. Bye-bye.